It's a very bad thing when the value of our debt goes down along with the strength of the dollar. That shouldn't be happening. What's supposed to happen when the strength of the dollar drops is that anything that's priced in dollars should be bought more. That includes U.S. debt. You see, the United States has a debt problem. We've become way too dependent on it. And I don't mean the average American consumer, I mean our government for overall spending. So when we have a deficit, like we've had a major one since 2018, we borrow a lot. And the deficit averages about $2 trillion every single year. That's very bad. What's even worse is if our interest rate on that debt is high. And it is. After the Great Recession, we issued a ton of debt. We borrowed more than we ever have, but it was okay because our interest rates were, 1% or less. But now our average interest rate is over 3%, so we are spending about $900 billion a year just to pay interest on the debt that we've accrued. So we need a lower interest rate. Stat. But if you look at my list of interest rates for our treasury bonds, you could see they are very high. They are over 4. Some of them are approaching 5%. Most commonly held debt by China, Japan, and a bunch of other countries are 10-year treasuries, 2-year treasuries, and 6-month treasuries. Let's look at those yields again. These yields have gone up, meaning the value of the actual bonds have gone down. Not only does the value of, let's say, a $100 treasury bond go down even lower to maybe $90 or $89, the actual value and strength of the dollar it's priced in has also dropped. It's happened about 4 times in the last 50 years. The first time was in 1978 when we had runaway inflation. We're not dealing with that now. Inflation is actually down to 2.4%. The second time was around 1994 when the Federal Reserve shot interest rates up to combat inflation. Not as bad as in 2022, but it was still high, and it was called the Great Bond Massacre. The third time was in 2013. It was called the taper tantrum because the Federal Reserve started tapering all of the quantitative easing, and the markets didn't like it because they were being spoiled babies. And the fourth time is the trade wars that we're dealing with today. It's not just economic uncertainty that's causing this. It's uncertainty in the American economy and our currency. There are 3 rival currencies that have been going up in value because the entire world is buying their bonds and their money. The British pound has been humiliating the US dollar since the beginning of this year. It went up from $1.21 to almost $1.32. It's at $1.30 now, so it's still gone up 10%. Then there's the euro, which has also been kicking the crap out of the dollar since 2025. It has gone up 10% as well. And last but not least, there is the Japanese yen, which has also gone up 10% in that period of time. The Japanese yen, that's the scary one because they are the largest holder of U.S. debt at about $1.1 trillion. It's less now because they've been dumping their bonds. Their currency has risen against the dollar, meaning that it makes American exports more affordable, except for the fact that Japan is going to be retaliating against us, so maybe we won't be sending our goods to them. But China will definitely be doing that because their currency is dropping. So yeah, now China and Japan have a lot to work with together without us. And like I've mentioned, they're already working together by devaluing our dollar and our debt. And no, a cheaper dollar is not going to get us more exports because we have trade barriers with the world. Everybody. Baseline 10%, meaning they are 10% less willing to trade with the United States. A lot of people are angry at me. They're saying, well, why are you being so negative right now? Why are you telling us all of this bad news? Why can't you tell us all of the silver linings? And I'll tell you why. Aside from the 4 events where our debt dropped in price along with a weakening dollar, I have never been alive at a time where we have had this level of tariffs against the world. The only time that we've had something like this in the past 100 years was when we went into a Great Depression as a result of these horrendous tariffs following the stock market crash. So if our earliest reference for massive tariffs like this was the Great Depression, and we are seeing the purchasing power of the dollar drop, and we are seeing the value of our debt drop, but the amount we owe keeps increasing, that's very worrying. And I'm not saying we are guaranteed going to go into a depression or a recession. Is it more likely than it was 4 months ago? Yeah, it's more likely, but it's not a certainty. But if things are going to get very, very bad, I recommend you find financial advisors on this app. I've recommended some. I think they can actually help a lot of us navigate whatever disasters are going to come. I would learn every strategy that these people had to offer, even if you don't have much money. And then I would highly recommend that you invest in yourself, invest your time in your family, and invest in your community. Get to know your neighbors, get to know everybody, because if things get really bad, you can't do this on your own. You have to rely on each other, whoever these each others are. I'm the GeoHusar. I am still hopeful that we can avoid these disasters, especially if Congress steps up and takes back their power to tariff. Thanks for watching.